Crunchbase data reveals funding to VC-backed Web3 startups is plunging, and only 333 deals were completed in the first quarter. Joining us now to discuss is Future Perfect Ventures founder Jalak Jobanputra and DARMA Capital managing partner Andrew Keys. Welcome, Andrew and Jalak.
Thank you.
Thanks for having us.
So, first question for Jalak. Your company has invested in over 60 companies across core Web3 infrastructure and early applications. How would you characterize the state of crypto VC funding in the wake of FTX's collapse and our current crypto winter?
Yeah, well, we're definitely in a winter in terms of funding, but as we've seen in previous crypto winters, where the price of Bitcoin may go down, the actual innovation actually goes up, and we saw a bunch of failures in the system last year. I mean, FTX was just pure fraud, but there was a lack of transparency, there was a lack of regulatory clarity, a number of things that led to that happening. And so what we're seeing right now is a lot of entrepreneurs that are looking at the core technology and how it can solve some of these challenges that we see. Blockchain tech is about transparency, it's about better efficiency. We are more excited than ever to be investing in the space, and we feel like we can really get to know the entrepreneurs in this market and spend time with them and make sure that we're aligned for the long term.
Now this show is called All About Bitcoin. So, Andrew, are you guys investing in Bitcoin startups, infrastructure, not Web3 but Web5 companies?
We are not investing in Bitcoin companies.
At all?
At all.
So, actually, why not?
Sure. I am more interested in the use of the next generation database rather than kind of the monetary policy experiment. Bitcoin is purposely built for transfer and storage of value, and aside from wallets and exchanges, I don't see too many compelling Bitcoin use cases and a kind of an interesting TAM. More interesting to me these days are around kind of staking functionality. So I've made a few interesting investments. One in EigenLayer, which basically can use the trust pool of decentralized Ether, so about $30 billion right now is the proof of stake, and can use that to secure middleware services,
right,
like data availability, sequencing, et cetera. That's one. Another one that I'm very interested in is in the advent and continuation of zero-knowledge proofs. We recently deployed capital into ZK Sync, which is a zero-knowledge Ethereum virtual machine. So we can basically have privacy and confidentiality in these transactions. So those are two examples of what I'm interested in.
What are the TAMs? What are the industries that you kind of are viewing longer term, maybe?
So today's staking TAM is about 20 billion in revenue annually, and I foresee that to hit easily over 100 billion by 2030.
So are you looking at mostly like sort of crypto infrastructure inside the industry kind of?
I would say we're trying to get as close to the metal as possible, and that's kind of where our research and development brain power is. And then in the zero knowledge TAM, I believe will exceed Bitcoin proof of work by 2030.
Nice. So
the zero knowledge proving market will exceed the Bitcoin proof of work market by 2030.
Got it. Let's talk about infrastructure a little bit, because Jalak, you were involved in telecom back in the day, I believe, making investments in that area, if I'm not mistaken. Like, where are we in terms of infrastructure development in crypto and Web3, Bitcoin broadly speaking?
I mean, listening to Andrew, it's really fascinating, and like just how early we are in all of this, right? I mean, staking, we're in the earliest days of proof of stake. We're now getting to a more liquid staking, and how can we, everyone's talking about AI, but actually the thesis of our fund when I started it was the intersection of AI, IoT, and blockchain technology, and how we can use all of these technologies to keep data more secure and transfer that data using all these broadband pipes that we've created through those telecom mergers and acquisitions that I worked on back in the day. So I would say that we're still in the earliest stages of knowing what this technology can do, because it's been very very specific, very like 1994, I would say, still kind of 1995. If you look at the internet and how slow it was in the early days, not everyone had access. Those data was just not accessible to everybody, and so that's kind of where we're at here. And so what we're doing is investing in companies and entrepreneurs that can increase the overall TAM of how many people can transact with blockchain-based data, even if they don't know that they're interacting with it. They don't necessarily have to have a wallet. It could be a company that has a wallet that then transacts, or your refrigerator at home, has a crypto wallet that's transacting with data.
It's interesting because people often talk about where's the use cases in crypto, but it actually seems to me, and to us, the people I work with often at Axelar, often seems like the use cases have leapt ahead of the infrastructure. It's like you're trying to send email and it's 1984. Totally. Right? That's what using DeFi is like today. Yeah. I think it'll be. I'm very fascinated to see how it evolves compared to what happened in the 90s with telco.
And we're not just interested in the financial applications. I mean, it's about how our media company, just like the internet, how our media company is going to use this, how our telecom companies, healthcare companies, and it goes back to this database that's can potentially be programmable with different privacy mechanisms, and so we're just getting into the meat of that. So when I think about crypto winter, to me, it's like a blip in this overall massive market opportunity.
Andrew, I have a somewhat prickly question, and thankfully there's not much time left, so you can maybe opt out of answering it. How do you respond to the classic criticism of crypto VC that invests in pre-sale tokens and then has an entry to exit in less than 12 months as not being traditional good VC?
So, well, first off, I don't do that, but
neither do we.
Well, I do think that there are mechanisms similar to private markets and public markets where venture capitalists are investing at a different risk-adjusted return. You outlaid the good result, but many of these results go to zero. And that is before they're publicly traded securities, as an example.
Yeah. Totally leading question. Just wanted to get your take on that. But that's all the time we have today. Thank you both for joining us.
Thank you. It was great to be here.
Thank you.
That was Jalak Jobanputra and Andrew Keys.